Hey everyone, it's Christian Gallagher here, the producer of Realty Remarks. Just wanted to jump in real quickly before we get started to let you know that the video version of today's episode is available by going to www.dwyerteam.com. Once you fill out the form on the homepage, it will redirect you to the video, which gives you the entire presentation that our hosts are looking at while recording. So it gives you all the information that you'll need to start your home buying journey, whether you're a first-time home buyer or a recurring buyer. Really good information to have. Again, it's the form on the homepage at www.dwyerteam.com. And without further ado, I'll let the host take it away.
Welcome to our exclusive episode of our home buyer workshop for 2024.
This is exciting.
Yes.
It's exciting to do this first one. This is great.
I'm here with Jerry Dwyer and Nathan DiGiorgio. Say hello.
Hello, y'all.
Hello, everyone.
And if you have been thinking about buying your first home, maybe getting back into the market or buying again, this is the episode for you. We're going to be diving into the whole process, talking about all fears and facts, and giving you the information that you need for when the time is right.
Perfect.
So what we're going to be talking about today is our workshop agenda. We have about us. We're going to tell you a little bit about our team, about Nathan. We have introduction. We have why buy, okay? So I know that's going to be a big question on everybody's minds. Fears and facts, getting started. Then we're going to go into the steps to home ownership, which really lays out from start to finish what you can expect, completing the transaction, protecting your investment, and of course, we are always here for any questions after the fact if you want to message us.
So that's what we look like there, digital world.
That's us on our good days. That might not be us in the office today. So there's myself, Jerry, and Nathan. And Nathan is a mortgage agent. If you want to say a little bit about yourselves before we get started.
Nathan, you start. You go ahead.
All right, I'm a mortgage agent with Y Mortgage here in London, and been in the business about 15 years or so, and just love to help people reach their dreams of home ownership.
So I am a realtor with Keller Williams. I have been a realtor for 18 years, and it's been an amazing ride, and I love what I do for a living.
Mm-hmm. And I joined Barbara and Jerry on the Dwyer team, and I've been in the business for about 5 years now. I moved quite a bit growing up, and I absolutely love being a part of the process, everything about business, real estate, and especially relationships along the way. So how we're going to start today is talking about what your first home means to you. So this is all content is based on Your First Home by Gary Keller. He is the founder of Keller Williams Realty. And I have here, after Hurricane Katrina destroyed their beloved New Orleans, many former residents were asked the following questions. Besides LOVE, love, what do you identify as the most important four-letter word? The unanimous answer was simply home.
Which is a big deal, really. When you think deep down, that's the people's sanctuary. That's really what they go to at the end of the day to unwind. So I think it's well said.
Where the family gets back together after a long day at work.
Yes.
That's cool.
So if you want to think of a few words to describe what having a home means to you, I'll ask my guests in the room today, Jerry and Nathan. What do homes mean?
Family for sure comes up for me first.
Yeah, I mean, that's a big one. I think that's undeniably probably the biggest when you really ask around. Mine is the unwind, the knowing that when I get home and walk in the door, that's the place that I'm me. It's a place where we enjoy family, we enjoy friends, we enjoy...
You think of it as a safe place.
You're right. That's really probably the best way to describe it. So I'm sure a lot of people would agree with that.
Yeah.
Mm-hmm, mm-hmm. Okay. Now we're going to be, the other great thing about homing on too is the financial opportunities that it can bring for you. And we'll be talking about that more throughout the presentation. But first, let's talk about the fears and facts, because we know this is the number one thing that are on people's minds, especially when thinking about buying their first home. Okay, so fear, I can't afford to purchase a home right now. Fact, you can't afford not to purchase a home right now.
Big one. That's a big one.
Okay, fear, I should wait until the real estate market gets better. Fact, there is never a wrong time to buy the right home. Fear, I don't have the funds for the down payment. Fact, there are a variety of down payment options available to you, and that's what a trusty mortgage agent is for. Fear, I can't afford to buy my dream home. Fact, the best way to get closer to buying your dream home is to buy your first home. This is one of my most important things here, because it's very, I understand when you're getting going, you're going to want exactly what you want, but what you need to think of it as a stepping stone. Think of it as creating opportunities into that next place down the line so that you can achieve that dream home. It might not be your first one, but it's about starting that journey.
I think that these are the most common ones that we hear, but there are more. But I think deep down, the biggest aha we want people to have is inquire. It doesn't cost anything to ask questions. So just make sure you ask questions that are concerns for you, and we can address those. Everybody's different.
Yeah.
So I think that's an important thing to say.
Okay, so we put here, because this is basically our philosophy. It's not as scary as it seems. We are here to help you through it all. This is just a little clip from Barbara Cochran, a realtor on Shark Tank. It's a little bit, was based on last year, and it is in the States, but it
still applies today.
It still applies today.
So the question I'm asked every day of my life is now a good time to buy a house. And you know what? Nobody thinks it is, but I'm going to tell you something else. What's holding everybody back is the higher interest rates. They don't seem so high to me. So I remember 18, 19%. So remember, they could go higher. But the most important thing is once you wait until interest rates go down, all hell is going to break loose. Everybody who's been thinking about buying a house is going to be out looking, overbidding every house. The prices are going to go through the roof. So pick your poison. High interest rates now, which aren't so high, or super high prices once they come down. Your choice.
And I think there's a really great point to kind of showing fear of the market too. A lot of people are so focused on the interest rates and try to time it when, that's why we say it's never the wrong time to buy the right home, because things are changing all of the time. And with the market that we have today, interest rates may come down soon, and that will improve people's buying power, and we can likely see prices increase. So we never know what the future holds, but we base off of history and statistics.
Things can change all the time, but it's what's important to the buyer, and every buyer's situation is different.
Mm-hmm. And sometimes, even though interest rates are high, that means you can get a home at a great price, which is the price of the home never changes, your interest rate will.
So
this was actually taken from financialpost.com. This was taken in 2024.
I think this is big. This is a big slide.
Yeah, this is really showing how net worth has increased since 2010. But one point that I really like here is this was taken from 2024 stats. But below we see a home is the largest financial asset most people have due to equity and appreciation over time. So we have since 1977, an average annual appreciation rate nationally is 4 to 6%. So,
and guys, these are average numbers, right? We're just trying to maybe different in different markets, but this is average when we're looking at across the board.
Yeah, and what this shows is that yes, home equity has grown quite a bit since 2010 and quite a bit quicker than it has historically. However, based on what our history stats are since 1977, we see despite that real estate is gradually increasing over time. Okay?
It always does. That average is, even if it's historically, real estate is slow to rise and slow to fall. Mm-hmm. So things the carpet doesn't get yanked out normally. So for the long-term investment, real estate is still the way to go.
Mm-hmm. Okay, so for example, at 3% annual appreciation, so this is just put the numbers in perspective, a home purchased for $150,000 would grow to $364,000 in 30 years. Okay, even at 1.5% annual appreciation, so that's half that amount, the same home would still grow from $150,000 to $234,462 in 30 years.
I mean, those are big numbers.
Mm-hmm. And it's just showing, even based on that minuscule growth, which the stat at the beginning shows that we have been quicker, but we're basing it on the history because we don't know.
That's right.
Yeah, how long this market will last. So home is where your wealth is. Grow wealth via equity buildup, debt pay down, and value appreciation. So what we have here in the top corner is Canadian homeowners' net worth is 4 times higher than renters.
Oh, man. I know, it's shocking.
People's net worth is tied up in their homes.
Okay, so more reasons to buy. If you took out a 30-year fixed rate mortgage for $150,000 and made monthly payments of $900, you'd pay $324,000 in mortgage and interest payments over the life of the loan. After 30 years, you'd own a home with an appreciated value potential of $364,000. Now that's at the 3% annual appreciation we were just talking about. However, if you were to rent, I think, Jerry, if you want to explain
Yeah,
this.
I mean, to me, this is a really impactful part of this whole process, because you can see the rental challenge on your equity is a negative versus a positive on the own side. So if you decide to pay $800 a month in rent over 30 years, which can be challenging when you look at rental costs now, they've really escalated, but we'll use that as easy math. Assuming your landlord never raised your rent, you would still have spent $288,000 and you'd own nothing after that same 30 years. So you'd have nothing to walk away with after being in that property and paying somebody else's mortgage for them.
Mm-hmm.
Yeah.
So, being on the owning side is definitely a positive for your portfolio.
Alrighty, so now we're going to get into the steps, which will then get into all the details, and we're going to go into from start to finish how it works. And once we get into, we'll start with a realtor, and then once we get into the finances, we'll have Nathan speak as well. So first, I want to point out that our promise to you in the corner. So for our team, for example, we don't charge the buyer anything, and we get paid by the seller. So it costs you absolutely nothing to work with a buyer's agent in this market. And although there are some things changing in the real estate world, our team sticks to our promise.
Exactly. I mean, that we are talking about what we do, not what other agents are doing, but we want to make sure that our buyers are buying the right house and there's never a cost from us to them.
Correct. Okay, so step one, working with a realtor. You guys get to meet with one of us or whichever realtor you choose. And here's a little idea of what your realtor should be doing for you and when you are interviewing, what you should be considering. So a realtor is there to educate you about the market, steer you to the homes that fit your criteria, negotiate on your behalf to protect your best interests, solve any problems that may arise, analyze your wants and needs, coordinate between lawyer, lender, home inspector, insurance, etc., review paperwork and all deadlines, and support you throughout the entire process.
So, I mean, the long and the short of that is we are here through the total process, as Hannah said. From start to finish, you never are alone in this, and we never want you to feel alone. We're here to help every step of the way.
And a lot of the stuff we're doing behind the scenes, so it's good to kind of point out
That's
what
right.
we're doing.
That's right.
Right? Okay, so this is your buyer representation agreement. This would actually be in the first step of when you're getting started, because it is now a requirement from RICO that this is signed before showing any properties with a licensed agent. So what this is doing is really, we see it as a loyalty agreement. It's saying that if you work with us, we're allowed to put our best interest in finding you a home. If for any reason, the relationship doesn't work out, that's something that we work on between the two of us. It's not something that we stick to, but this is a requirement and every agent is different.
Yeah, I mean, it's now real estate law for buyer representation agreement. So the buyer knows who is the representative, and it will alleviate any challenge on paperwork later. So all of this stuff is discussed up front.
Mm-hmm.
And there's never a fee, and we never want anybody to be committed to buy a house. But what we're saying is it's mainly a loyalty agreement. So our services are free. As long as you purchase a house, we would love it to be through us, because that's how realtors get paid, is from the listing side.
Exactly. And this is how you know too that person is holding your best interest as well.
Yes.
It also protects you. Okay. So step 2, and this is what needs to be done. I always press this before, setting listings up and criteria. And this is going to be Nathan's bread and butter, getting pre-approved and mortgaging. Take it away, Nathan.
So it's never too early to start talking about pre-approvals. Typically better to get pre-approved before you go out there and find your dream home, because then if you can't afford it, then every home doesn't look quite as nice after the fact.
Good point. Well, yeah. Well talked about there.
So there's a few different there's a ton of different options with mortgages. We'll talk about sort of a couple of them here. So the down payment is one piece of it. So there are a lot of regulations around the down payment that are in place from the government of Canada. We just have to basically confirm the down payment source. It can be from your own resources and savings, including RSPs, gifted from an immediate family member, and sometimes even borrowed, or at least a portion of it borrowed. So We can always, so even if you don't think you have enough saved, you can definitely either talk to a bank of mom and dad or borrow the money from a bank. So those are some good options with down payment. And when you get into the actual mortgage, the lending side of it, important pieces are the interest rate and the term. A lot of times people will a big decision between fixed and variable interest rates. Right.
Can you explain fixed and variable?
Yeah. So fixed rate is pretty self-explanatory. The rate doesn't change throughout the term, which can be anything from 1 through 5 years. Most people take like a 3-year or a 5-year. So if you sign up and you got an interest rate of 5.5% over 3 years, your payment won't change for those 3 years. At the end of the 3 years, you will renegotiate the rate based on what your current lender and other lenders are offering, and then your pay at that time, depending on if your rate is higher or lower, your payment will go up or down. Variable changes when the interest rate changes when the Bank of Canada sets the overnight lending rate, which is the thing that gets all the news coverage these days is whenever the Bank of Canada meets. So it's gone up really quickly in the last 24 months, kind of held steady for the last 6 months or so. And we're sort of, as we sit today, we're waiting for them to start dropping rates. Everybody's hoping. So when you're in those variable, if you've been in a variable in the last couple of years, you've seen your payment go up quite a bit. And now you're hopefully on the other side of it and you're going to start to see some relief. Same thing with the variable. You can typically select a 5-year term. At the end of the 5 years, you can go back into another variable rate, or you could convert it. You could go to a fixed. And a lot of variable rates do offer the ability midterm to convert to a fixed rate. Talking a little bit about pre-qualification and pre-approval.
Yeah, I think that's a big one that comes up.
Yeah.
With most people are maybe confused on the difference between the two.
Pre-qualification is what you're basically putting it online.
Pre-qualification is if you ever see like an online mortgage calculator.
That's good.
Or the old, if you're of a certain age, you'll understand the analogy, the back of the napkin calculation, where you're just kind of saying, this is how much I make. Okay, you're going to qualify for this much mortgage. Whereas if you do a pre-approval, you're going to talk to someone like me, or ideally me.
Nice one.
and I will check your credit. I will verify your income. So it's not just enough to say I make X amount of dollars a year. We want to see pay stubs. We want to see T4s confirming that what those amounts are. And then we can figure out, based on what your credit history is like, what kind of debts you have, if any, what you actually will qualify for. And at the end of that, you'll get something in writing that is a formal commitment from a lender that will hold an interest rate for you for up to 120 days usually. And then you know that you have the backing of a financial institution as opposed to the pre-qualification, and sometimes people confuse the two. Sometimes it's just you feel like you're shopping because you punch in some numbers online and you feel like you know what you qualify for. It could actually be very different.
And it can be detrimental from a realtor's perspective too, because if you're going off of your pre-qualification and unfortunately we find out later after seeing a bunch of houses at your pre-qualification number, and then we find out later that your pre-approval isn't quite up to that, then you're always going to be comparing those houses that are less value to those ones you saw that were more expensive, and they'll always seem a little less than. So I think it's very detrimental to start your search without knowing exactly where you're at, because you could be leading yourself up for disappointment. And of course, we don't want that. Okay, so this is getting a little bit more into the suitcase principle and mortgage options to consider.
Yeah, so this is just a little bit about what you can borrow versus what you can afford. So everybody has very different monthly expenses. Cell phone bill, probably everybody has these days. Childcare is a big one that some people have, some people don't. So just because I tell you what you can borrow doesn't necessarily mean that is what you can afford. So we need to figure out what a payment is that is comfortable for you based on your particular set of circumstances. A good rule of thumb is you're spending about a third of your gross monthly income on your monthly home payment. Some numbers have come out recently where I think the average is, I don't want to shock people, but it's like over 60% now in Canada as house prices are quickly increasing and mortgage rates are pretty high. Hopefully that will come down in the coming months as rates drop a little
So
bit.
if you're seeing this and freaking out, don't. You're not alone.
Yes.
Everybody's in a similar boat.
The affordability crisis is definitely real.
Yeah. Okay, so step 3. Now we've talked about all the fun mortgage stuff. You get to start looking at houses. So
This is the fun part.
This is where we come in.
Yeah.
So what you should look for at a showing and what your agent should look for. Jerry, I think some people are missing your voice.
Yeah, I mean, I think that this is where the fun part starts. I mean, you spoke a lot about and Nate said too about getting that pre-qualification. I mean, that's the important
Pre-approval.
part. The pre-approval. That's very important because that will put you in line with the houses and that pique your interest that are actually in your wheelhouse. So it's important to get that done first, and then we can start looking at stuff that meet your criteria. So that would be simple from you're looking for a 2-bedroom in a certain layout with certain features and the location, and you want to make sure that there's a sense of value to you, and every value is different for every buyer. So what are you falling in love with when you walk in? And I'm sure a lot of you out there in the listening world have heard when you walk into the right house, you just get that feeling. You get that feeling that this is the right one. And
I can usually tell by my clients' faces.
Yeah, it will. And it's hard to describe that or explain that until you feel it yourself. And it does happen. And it's a very unique feeling that people will realize, and then they see firsthand.
It's the best feeling. It's my
really
favorite part of our job.
And when you see that on people's face, it's very rewarding that you've been out there as a buyer looking at the market and you found the right house. And now we work towards the purchase process and explaining what the next move is. And do you write an offer that's right for you? We talk about the features and the amenities, but not only that, with the location, we also talk about what's around it. What's important, schools, amenities, all that stuff as well.
We make sure to keep our eyes on the things that you might not. We try to think as a realtor's perspective. We're going to give you comparables, keep an eye on the condition. We're not an inspector, but we have our experience to know what to look for in the big things.
The red flags.
Yeah, exactly. Yeah. And also, most importantly, your value, making sure that you're getting the property for the right price and that it's something that can grow over time for you. Okay. Step 4.
So now brings us to the making the offer process. So once you find the right house, it talks about price. So ensuring that your offer reflects true market value of the home. And then the 6 basic categories under terms to address timing and financial considerations. So those are potentially information and stuff for the buyer, not necessarily for the seller, but then contingencies. Often referred to as conditions, which is, that could be financing, that could be home inspection, that could be an insurance condition, that could be if you're buying a condo, there might be the lawyer's review of status, and all of that stuff comes into play depending on the property that you're looking at. And those are all important parts of that make an offer process.
And the best part is that's why you want to work with a realtor, because when it comes time for the offer, that's what we are here for, to ensure that we've gone over all of this, the most common conditions, everything that in your offer to protect you, and so that you know what you're signing. So for terms, for example, you would have irrevocability, how long you'll give the other party to answer. You'd have your price. You'd have your deposit, which we talk about in a little bit. We have your any conditions, and of course any chattels or anything that's included along with fixtures.
So chattels are like, for example, appliances, fridge, stove, dishwasher, washer, dryer. We also talk about
things that aren't built in.
Yeah, we also talk about window coverings, bathroom mirrors, garage door openers. All of that stuff is part of the process, and we go through that with you when you're buying to itemize the stuff that's important to you and make sure that those items will stay.
Okay, so what's a fair price? So this is just a really rough outline of what we do behind the scenes when comparing properties. This is actually quite out of date, and it is the States, so take it with a grain of salt. But it essentially it's the same process.
I drew those pictures.
Yeah, when we're looking at property of value, whether we're listing or if we're helping a buyer, we need to look at the neighborhood. We need to look at similar sales. We need to know that the offer that you're making is fair to what it is. And so by showing you those, it allows you to also feel more comfortable about the offer you're putting forward, because you're able to see for yourself what the stats are. And that's why we would lay out something like this, showing a comparable analysis.
Yeah, I mean, and to elaborate on that, excuse me, a little more, if you hear your agent, or when you're out looking, you will hear your agent talk about comparables. And what they do is, and what we do is, when you're looking at a house, we make sure the price is in line with the area, in line with the condition, in line with what's around it. So you're not paying more than you need to pay, and keep the numbers level so you can build on your investment from day one. That's our goal for you.
We never want you to overpay for a house.
Yeah.
So if you feel you're overpaying, we would say something. We would say this might be subject to an appraisal or something
That's
like
right.
that, right?
That's right.
And those are the risks that can happen, and those are things that we always cover and protect you from and talk to you about. We'll talk about that too soon in appraisal. So, congratulations! You got your offer accepted.
That's the good part.
Yeah. So, assuming your offer has been accepted, the first thing to do is celebrate. Most people usually want to get all their stuff done the night of, but I try to force people to celebrate because it is an exciting time. The next day, you can focus on getting all of your stuff done, which the number one step will always be your deposit. Okay. So the deposit has to be available within 24 hours of acceptance. Nathan, you might be better to explain this. It is a part of your down payment.
The deposit forms part of the down payment, so whatever you put as a deposit is taken off of what the end down payment amount required is.
Yeah, so it's really just to show good faith in your offer. A lot of the times, I think in London, what are we seeing, Jerry? 5,000 minimum is the lowest.
Yeah, I mean,
seeing.
London used to be really low as far as deposits were considered, but they are starting to raise them a little bit. So we're not a city like Toronto where Toronto would expect 20 or 30% of the home value as your deposit, but we're looking at somewhere around that, between 10 and 20,000 normally. Yeah. But it just depends. Sometimes
maybe the odd for 5.
Yeah,
but yeah,
it does depend on purchase price. Sometimes you can get away with a 5,000 on a condo purchase. But just keep in mind the amount that's for the deposit. That's not just wasted money. That does come off your down payment money, and it's held by the listing real estate office's trust account, and then at close that goes back to the lawyers for disbursement for the closing.
Yes.
So money's not just, you don't just lose that, but it is part of your purchase process that is required. So we get asked that a lot, and I think we do talk about it further. On the side, we talk about deposits and where the lender, and Nate will speak about this when that comes up, but we talk about the importance of having the deposit secured and you have a paper trail for that deposit in case the lender asks for it. That's a big one.
Yeah.
But I think we talk about it in the next few slides, so I don't want to
and
get off topic there, but that's a big one. So what I think the biggest thing is people think that they have to remember all this stuff, and they don't. We are here to guide you through this process. So we know this is a lot of information, and we don't want you to feel overwhelmed, but we are here to step by step to take you through all of this stuff and make sure that all of this stuff gets completed at the right time.
Yeah. Essentially, when we meet with our clients, we're going through this every step of the way, but right now we're trying to condense it for you all in one to just show you what we do and give you an idea on what's going on behind the scenes. Okay, so also a note with the deposit is that it's important to know that you need to do that because your funds need to be available. So although you don't need all of your funds for your down payment until close date, you will need the funds for your deposit within 24 hours after acceptance of an offer. So you want to make sure that those funds are available because they'll likely cash it quite quickly. Then we have, and also that is the only way to mark a property for sale. So we're usually getting hounded to get it to the agents.
Yeah, these are steps that are important. But again, we're here to help you with all that stuff. You don't need to remember this step by step. We take care of that.
Yeah, exactly. Okay. Home insurance is something that you are required to have in Canada when purchasing a home. So home insurance might be a condition that we discussed. You just want to ensure that you are able to get home insurance and that is in place before meeting with your lawyer. An inspection, again, realtors are not inspectors. Although we have experience of seeing a lot of houses, we do not have that certification. So we always recommend if an inspection is important to you that you have that as a condition. An inspection is usually at the expense of the buyer. Yep. And you want to mainly look at the big things such as cracks and crumbling.
Yep. So you're right, the big things are important. I mean, some people think they're looking at little things like a burnt out light bulb. Those are things that can easily be addressed, but what you're looking for as a buyer are major things that's going to affect your pocketbook or affect the value of the home. So you can see we do have a few things there, like mold is a big one. If there's a wet basement, which can happen in older areas, older homes, where you might see that, but we want to make sure, is the water a constant problem or has it had a wet basement before? But we have telltale signs that we can see as agents, but if we're ever concerned, we always recommend having a licensed inspector, certified inspector, come in and give their opinion on that too, because that can alleviate 70 to 80% of your risk as a buyer, which is huge. That's a lot of way. We don't want you to have to spend a bunch of money in renovations right after you move in. That's not fun. We want you to move in and enjoy the home that you purchased.
Yeah, and I will say that I know, based at least on today's date, that we were seeing a market with not as many conditions for inspection and all of that. I will say the market has definitely, we're seeing that more.
We're seeing,
so
we're definitely allowing for that.
don't feel like that if an inspection is important to you, then
it's important to us.
That's important to us.
Yeah.
We make sure that happens, okay? So moving on, preparing to close. You've got your offer accepted. You've now fulfilled your conditions, okay? So if you have inspection, if you have financing, you give the lender time. And remember to, just with, say, a financing condition, I should elaborate on. Actually, let's go back. Financing condition. Yeah, we should elaborate
deposit
on.
Financing. Yeah, so
because
you're right, not just about deposit, but financing condition if there is one.
Yes, because, and especially if you're a first-time home buyer, your mortgage agent will always recommend to have a financing condition. Nathan, if you want to speak on that. It's there to protect
you, for sure.
Yeah.
The financing condition is there to protect you. So just because we got you pre-approved previously, you still need to get an official approval that is relating to that particular property that you've purchased. So a big part of that is confirming the value of the house, which your realtors typically have done a good job on. But we will need an appraisal more often than not. And we want to make sure that that appraisal comes in at the purchase price so that it doesn't impact your financing, and also so that you have some confirmation that you've gotten the property for a good price too.
Yeah, and I was going to say too, an appraisal can also, it can be a good thing because it's showing that the home you purchased for is for the value that you purchased it for.
Yeah.
Okay.
Yay! Back to
preparing to close.
So right from, because this shows all the steps. So from the appraisal, if required, to the title search by the lawyers, the evidence of insurance, which your lawyer will ask you for, and so will the lender, setting up utilities, meeting lawyer, signing remaining paperwork, which is usually done the last couple weeks before close, let's say, and then the final walkthrough, which we arrange with you as your agent to make sure that the home that you purchased is still in the same condition it was when you purchased it. And then certified funds in place and ready for transfer, and your lender and your lawyer work that all out. And then keep yourself mortgage worthy. That is huge, and it's not discussed very often, but we do want people to understand when you buy a home, it's a very exciting time. And a lot of people like to say, okay, great, now we're going to go out and buy furniture for the house that we just bought, which is a great thing. But what we tell you as your agent, and what your lender will tell you, and Nate will speak to this too, is knowing that you need to keep your financing in check. So if you dramatically change things, like rack up a credit card, start charging money, it can affect your value at close, which, Nate, does that, or can that change the approval in the end?
It can, yeah. So it depends on the lender that we choose. Some of them don't do any checks after they've done the original approval, but other lenders, it depends on, every situation is different when we are choosing a lender. But if you're with one of those lenders, that they can do job call letters right up, they can call on a job letter right up until the week of closing. They can check your credit right up until closing. So if you've spent $20,000 on appliances at Tepperman's, that could have an impact on what those final numbers are. So,
which can change the end result. I mean, that could affect you not closing.
Yeah,
on
you
the
want to
house.
be able
So
to close.
we just, and there's nothing wrong with being excited, but we just say as your agent, and as Nate said, just don't do anything major, because it's like you're not gonna, once you buy a house, you're not gonna go out and lease a new car or buy a new car. You want to maintain exactly what you have until closing, and then go out and get all the stuff that interests you once you get the keys, and then it's officially closed, just to protect yourself and protect your investment.
Okay, and congratulations.
This is the best one.
You're now a homeowner. You
So
get
we're
the
actually doing that
keys.
little hand
Yeah,
gesture
I'm
here,
doing it
right?
right now. So we're here. We're about to near the end of our presentation. This means that you got a phone call. It's closed. Everything's done, and you're going to be getting the keys from your lawyer, or your realtor will be grabbing them for you. But most importantly, once you move in, you're going to want to protect your investment. Okay. So keep it clean, keep an eye on it, and keep receipts, because we never know what the markets are going to be and when it's time for you to make a change.
That's right.
And so maintaining your home as best as possible, keeping a record of everything, will allow you to even be that much more, to have your property stand out much more than others. And if for any reason the market change from a buyer's market opposed to a seller's.
Of course, and those things, like as Hannah mentioned, the receipts are a big one, because if you're in the home long enough, you will do renovations, right? From what year did you paint the property? What year did you change the kitchen counter? What year did you change the tap? What year did you put the garage door opener in? Every little thing will be a good reference for later when you sell it, because those things that you've done can be stipulated in the listing when you go to list it. So not only are you excited about your purchase, but you're also trying to protect your investment for later.
Mm-hmm. And I know when I work with a lot of buyers, when we go to those listings that have all the information of all of the updates, and when they're able to give that, it also gives a sense of, you know, comfort, because you trust what you're
Right.
purchasing, and that can also help when you're listing amongst others. So that completes our presentation. One thing I do really want to mention regarding Nathan is a mortgage agent, but we never actually specified what a mortgage agent is compared to going to your bank. So if you wanted to give Nathan a call,
That's why you're you.
if you wanted to give Nathan a call about anything for mortgage related questions, of course he's there, and Jerry and I and our team are here if you have any questions about your home buying journey. We are a very low pressure team and want to do this at your own pace. So, but Nathan, please mention kind of the difference. Why was someone called mortgage agent opposed to going to the bank?
Yeah, so as a mortgage agent, I work with many different lenders, most of the banks, and there are some other non-bank lenders out there as well. And they all have different programs and policies in place, and depending on your unique set of circumstances, something different. There could be something different out there, better rates, or just a specific self-employed borrower
That's a big
type
one.
of situation.
Yeah,
That's
I
a
like
big
that.
one.
Yeah.
Whereas if you're dealing with the bank directly, the representative from the bank only has that bank's products and policies to choose from. So whatever that bank's lending guidelines are, then you're stuck with those guidelines. And as someone who used to work in a bank, I can tell you there's a whole lot of different options out there when you get outside, and you can see what the other options are for you. So
Yeah.
But, I mean, that's huge, having as many options as you can with a one-stop shop. That's important.
Yeah. So I just want to clarify for everybody watching, we understand that this can seem like a lot of information, but that's why, you know, we take it every step of the way. This was a whole gist of how the process works. But this is what we do every day. This is our life. So
So there's never too big or too small of a
Yeah.
question. If it's important to you, it's important to us. So don't hesitate to reach out. We're always around.
And one thing that is also important to mention is in regards to your lawyer, your lender, your home insurance. We ensure that once you have a property, an offer accepted, that we are the communication amongst your network. So we make sure your lawyer has all the information they need. They have all the paperwork, so that all of this you're not worrying about, we're worrying about for you.
We can take care of all it for you. That's another good point.
Yeah.
That's why we're here. We know that we want you to be excited and stay excited about your investment, and we'll take care of doing everything behind the scenes for you on your behalf.
So thank you everyone who has joined. Thank you so much to
Yay!
Nathan,
Thanks,
our
everybody.
guest
Thanks for
today.
coming by, buddy. Appreciate you having me.
And we
That's
hope
great.
that, you know, whether you're looking to buy in the near future or 5 years from now, that this was helpful for you in any way. Of course, we recommend that you use somebody from when that time comes, and we hope you would consider us. But thank you so much for listening, and have a great 2024.
Yeah. Beautiful.